welcome everybody. All right, welcome back. I'd like to welcome everybody here again. Good morning. Please, if you can just let us know by pressing number 5. Number 5, if this is your first day and the first time that you're get to know us. Please let us know. This way we know we're going to bypass most of the information and just get right into the nitty-gritty. We give you a warm introduction. So please just let us know. That's all we need. Eva, welcome. Thank you for your time with us. Good morning, Barrio. All right. So, all right. So let's just go pretty good because I think Eva deserves a little bit of information about it. I'm going to go pretty quick about it. So don't worry for those of you who were here yesterday. All right, so today you're going to learn how to increase your trading winning consistency with our highly award-winning daily market analysis, being averaging about 10 ROI per month for a little bit over 4 years now. And it will help you avoid the most common problem with trading, which is analysis. You should be, I got a delay now.
All right,
it should be there. All right, and now is the time to go to the ladies or men's room. Turn off your cell phones. Important. This is not for you if you're inexperienced, never traded before, can't tolerate risk, don't have full risk capital. If you're looking for the Holy Grail, we're not miracle traders. You don't have a clear short plan in place. You don't have self-control or discipline in trading. Definitely, possibly, speculating in the market is not for you. Even if you can't afford to lose money, then trading is not for you. Just being pretty much thorough. You will also have access at this point to Chatzy. I'm just giving you a screenshot what Chatzy is, right? And this is important, right? Because this is a way that you're going to be able to share with other founding members, being with us almost 4 years now, and their experience and how to learn and get the grasp of the information that you're going to be acquiring, right? There you can see here, there's people being with us 6 months. I have 4 great profitable months, then got distracted, blew my account, and I came back. You can see the difference of profits, 18, 28, 11, 14, 23, 39, 26, while others make only 9, 10, or 8. It's because everybody has their own personality. The reason being is because the information we provide is to make you a better trader, but you are responsible of taking that information to the next level. All right. I have been in this room for about 1 year. That's the most important thing. So it's, we're not a fly-by-night operation. We're here obviously to better the chances of your trading through very powerful information. Okay. We opened doors in May 2014. My name is Carlos on the left side. This is Juan on the right side. My bed student now, colleague and partner in trading mission, as well as Jimmy and Pete on the back side, which help you, get everything that you need to be well taken care of. All right. So I started teaching in '98. In 2001, I was able to be part of overseeing the big S&P futures market as the main analyst. I was not the trader, by the way. I just want to make clear this. I was not the trader. I was the main head analyst for a small hedge fund for 1 year in Florida. And it was a, excuse me, a very interesting experience. And in '98, I was teaching risk management to a small group of bank Santander Security stockbrokers, and that was pretty much my first step of my career as a mentor and coach. So I've been around for quite a while teaching, so I think I might be able to be qualified to help you at least get something extra for your trading arsenal, right? So in 2015, we were awarded by Dr. Dean Hansley the Trade Titans Award based on trading truthful, transparent, and profitable, and being profitable. So up until now, we still are part of that group as far as I'm concerned. And this is really awesome because it's just basically trading mission. Once we open the doors, we focus on mainly providing those high quality information. That can take the trader to the next level. It's quite difficult because everybody has a different style and methodology. Hopefully today, what we're going to be introducing to you is going to take that to the next level. This is how it's going to work. We're going to create a pre-market analysis, a very detailed one, step by step. We'll identify the main trend. I'm going to share with you one of our main secrets, which we did yesterday, on how we pick the main trend and confirm that with price action structure. And we'll also give you high accurate bullish and very subjective levels. We call them objectives or targets or reversal points, whatever you want to call them, okay? As a second step, as an additional step is if we see it fit and feel comfortable, we take live trades based on our own trade strategy, which is not your strategy. Understood? Make sense? Yes or no? Please press number 7. If that makes sense. My style, our style, is not your style. I just want to make sure because everybody tend to follow the lead in terms of who they're trying to watch just to see if it actually works. To be really thorough and transparent, to be responsible as well, it's extremely important. You just sit aside, watch it on the sidelines, on the simulation account. If you got the urge to trade what we do, it's most likely you're gonna get stepped out. Why? Because we tend to on here on the trading mission, we don't like to trade the way that we actually do. We take really bigger risks because we're swing traders. So I'm trying to adapt into day trading. So in other words, our strategy might not be for you, but on the other hand, it might be the style that you were missing. All right. And we will also aim to take profit and losses based on our personal preferences, not yours. So my risk tolerance might be lower than yours, might be bigger than yours. Okay, that's extremely important. So basically, we would the main focus that we're going to provide you that where the buy opportunity might happen, where the sell opportunity might happen, and this is how it's going to look. You're going to have a screenshot that you can download every single day and use it on your benefit. And for instance, this is an example of the NQ. And we created kind of a visual representation of the levels that you might want to take, advantage on. So the brown box here that is circulated on the blue highlight basically represent an area where the highly probability, unstable or choppiness or unbiased tendency should extend to until that point. So basically, as an example here, if the prices break above 1325, the probabilities of continuing to the next levels are higher without any interruption. It is 100% guaranteed? No, it's not. But that's the tendency. Those are the smart money levels, the hedge fund levels, or whatever you want to call them. I call them the hedge fund levels because most of the levels are confirmed based on a group that I'm part of from one of my mentors, which they are hedge fund traders, okay? So that's one of the perks that I personally have, and I'm extending it as part of the analysis on trading mission. That's the whole thing, 100% transparency. I'm just saying it right off the bat. That's the reason when you see this level being reached, a lot of people say, "Oh my God, you're amazing," and blah blah blah. No, we're not. It's just we're getting it from the source, and we are all trying to capitalize on that information. Does that make sense? All right. So I'm just being very specific of those points. Now, we're really good at picking the trend, and now the levels are the next step for us to be to understand where most likely the market will go and so on and so forth. All right, so it's basically a daily roadmap for you. Okay, I'm going to explain. I'm going to show you how it looks. You just bring in Chatsi here. You click on the top. You click on ES, for example. It will open up a screenshot, and the screenshot will give you the no trade zone or choppiness. Once they break below that level, these are the levels for today. Pardon the fact that I did not round it up to the right decimal point, because then I would never have the time to launch the presentation. Okay, so today, please round it up to the most common decimal point on the indices. In this case, it's like 50, 67 should be 75, 17 should be 25, so on and so forth. All right. I just wanted to share that with you. So it's here available for you for the next 24 hours until the next day comes in, and then we'll pretty much let me answer that. And the objective is for you to apply your own entry strategies to our analysis, okay? So once you understand how we work, you'll have a 100% competitive advantage against 80% of the other traders. Now, the cool thing is that for the second time, yesterday was the first time, we will share our competitive advantage against 80% of other traders, which is our exclusive proprietary momentum bias software. And that seems to strike the nerve yesterday. A lot of people been emailing us, asking about it. They kind of benefit from it. Let's see how that will work today. All right, so I'm gonna forget about the tool at this point. Let's just go on into the analysis. Obviously, the market is sold off like crazy. Not even the biggest analysts know what the heck happened. And it's just pretty much, we've been talking about for quite a while that the market has been extremely extended overbought. So it's not a big surprise for the market actually drop. The surprise is how fast it dropped. So for those of us who has a 401k and all that crap, well, we're screwed. But anyways, the point is we can hedge that by doing day trading, right? So here's the CL. Let's just start analyzing the market pretty quick. Here's the important low that it was a couple of days swings sessions back. Here's the important high. Are kind of the most important ones, right? And we're going to connect those at this point. Then the market just kind of drifted, never broke outside that high that they left behind, making a new low, breaking the important low on the big swing session, right? So this seems to me kind of an Elliott wave pattern in here. And I see it more of a possibly corrective mode or whatnot. So the thing is that once they took this important low right there, the main trend is sustained into the bearish tendency. So at this point, obviously the market is pressuring everything to the sell side. Of course, we got the tool that we're going to explain it, but just by glancing at it, it's as simple as focus on sell setups only. Awesome. So now that we explained the main trend based on price action structure and momentum, which I'm going to be a little bit more thorough in a moment, I'm going to go back to 10-minute, and then I'm going to start analyzing the levels and whatnot, okay? So here they are. So basically at this point, what we see is the fact that we got a no trade zone area after the huge sell-off yesterday. So basically, as long as the market sustained itself between the 34 and the 64.010, the market will have a lot of pressure on the top side on the way up. Sellers stepping in all the way up. Here's a transition all the way on the top side. So that you got the point. And it's not until they break above that, then the seller might seize their intent and then allow the market to continue further up for the next upcoming resistance points, right? Which are labeled as follows, right? 43, 48, 58, right? And so on and so forth. The same thing will apply on the bottom side of things. You can see here a lot of pressure mounting in between 34 and 44, but until the prices break and close below of it, there is a high probability for the market to go and test the next levels down, which are pretty much labeled as follows: 63.11, 98, and then 62.45. You can see here that we missed the bottom. Maybe we reached it 11. Let's see what the low was. 12 by one tick, double bottom by one tick. I'm not going to complain, in fact, of calling the level, but by one tick, I think that was surpassed or reached, right? So that was a 22-point drop from the bottom of the no trade zone. And so far, the tool is indicating at this point, let's see, you guys who has been with us for a couple of days really grasp the idea by watching the tool, which I'm going to explain for everybody who's new here. So let's see you guys get it. What is the tool suggesting right now? I'm not going to say it. I need you to say it. All right. Anybody care to join in and shine in? Sell, down, down, sell, bearish, downside momentum, sell setup. Absolutely. M60, I will not have the time to explain the details today on this, because then it's going to be a lengthy presentation. But anyways, the number that you see here is a percentage of readings. It's a percentage, and this does not, although it looks like it's reading like 60 minutes, it's not. It's reading tick by tick. So every tick move for the last 60 minutes. So it's actually from the last tick, it's reading back 60 minutes worth of ticks and creating an average and identifying a percentage inside of commitment of traders. Understood? It's kind of the thing. So that's kind of in a nutshell what it's doing. So if the way that we had it configured, or after, Juan, are you there? How long do we been trying to develop this thing?
4 years, I think, 3 to 4 years.
Like, yeah, I think we're closing 3 years now. So it's not only the tool, it's identifying the levels and the numbers. In every market is different, but in this case, we figured out that the main trend for the remaining of the session, it's comprised by following this guy right here, the 60, and using 60 minutes worth of tick data and a certain percentage, it will guarantee the main tendency for the market. I think I do, I think I don't. Let me look for it. For those of you who were here yesterday, can you press number 8? For those of you who were here yesterday, can you press number 8, please? I want to share something with you. I need to know, because then I know that, okay, thank you. So we got Kevin, Peter, Tony, blah, blah, blah. What was the main decision when we opened the trade room yesterday? What was the setup? What was the main trend? Anybody care? Because I want you to say it. And that way, for those of you who are here for the first time, you can see, all right, he's not bullshitting us. Thank you. So you can see here right off the bat, I'm putting myself on the line here. Everybody was here. Most of these guys placed number 8, and they're saying, okay, down, sell, short. Anybody remember that we got stopped out? Yes or no? Because I was, I placed a stop too tight, whatever, trying to, be a little bit more conservative. I should have placed my stop on the swing high, but that was way too overextended on my typical expectancy. But there you go. It was a sell down. Take a closer look. Anybody care to understand? Anybody follow? Actually, let me see if I can find it now. Where was it? Here it is. This is the result yesterday. Look. After the fact, we got stopped out in the morning, not in this pullback right here. We were going short, but eventually, where did the market win? Right? You see the targets? These were the targets that we labeled yesterday. Anybody care to remember this? Right? So yes, I had a whatever 22, 25 tick stop, but then again, came back again, do it again, pulling bar technique. Do you notice the pulling bar technique, which I'm going to explain earlier? I mean, in a little bit, I explained yesterday earlier. That was the pulling bar technique on 50-minute chart. Boom, entry again. Target hit and second target hit. So have I been clear, right? So if you think, or if anybody think that this is not real, please ask anybody in the chat box, because it's not about the actual pulling the trigger setup or the trade. It's calling the levels and the trend. If you have the trend and you have the most highly probability targets or levels, it's up to you to make it work. Even if you get stopped out first, so what? Just sit aside, wait for the next opportunity. If you believe in the system and you have confirmation on the system, then you just act upon it. Understood? Am I being clear, guys? So I just want to share this because a lot of people yesterday was, oh, what a bummer, we got stuffed out, blah, 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 blah. But the trend never changed. For everything to align itself again as it should. And then I took advantage and action upon it, right? And I was able to recover and walk away with a profit. It's as simple as that. You do not walk away because you got stopped out or whatnot. That's amateur style of trading. All right. I just wanted to share that. So back in here. So the main trend is down, and we have here the 5 and 15. As long as these guys are above 150, it's just suggesting that the sellers are backing up the main trend. Let me explain again. This is a phrase that we're probably going to be referring, and it's going to be sticking in your head, at least for the oil. M60 is at above 110, 115. Yes, it's bearish then. That means preferably 200, by the way, preferably 200. But 115, 110, it's acceptable bearish tendency. Now, this guy's right here has to be above 150 to 200, right? It doesn't matter, either or, preferably both, of course. If that does, this is how the phrase in your head should sound. Main trend is down, and the sellers are backing it up. Understood? Say it again. Main sell setups only. Sellers are backing it up. But what happened if this guy's dropped from 100 below 150 or whatever? Then you should be worried. You stand out, stand by, or tight your stop. You see? Then the mindset doesn't deviate from the fact that you have to be a good analyst in order to execute your trades. You don't rely on this 100%. Yesterday, we rely on it. It was telling me focus on sell setup and everything was lined up. Yes, I entered a little bit earlier. I admit it. In price action structure entry, I did it a little bit early and I got stopped out. I didn't wait for full confirmation. I didn't wait for this one to be really strong or this one to be completely strong. I saw a tiny bit of a glimpse of a confirmation, and then I just jumped right at it, and I got stuffed out. Then I waited for everything to be aligned, and then it worked. Okay, we did that yesterday 2 times. We demonstrated it, and it worked perfectly. Okay, so back into the analysis. Now that I explained how we pretty much use this tool, everything is goes back into the analysis. If the market breaks below 34, it will trigger 11, 98, 45, and potentially 6202 and 6177. We're gonna diet it out up until there, nothing else. I think there might be another one further down right there, but we're not going to push it, all right? Because you should have a personal objective in your mind. You should have a personal objective in your trading plan, not try to get the most out of the market as a ATM machine, robbing it from it. No, you're pretty much saying, I'm going to get in, I'm going to make at least 15, 20 ticks, 20, whatever that is. Or you know what, I'm going to try to aim for the closer targets here. Or you know what, I'm a swing trader or position trader. What I'm going to do, I'm going to take a trade. As long as this guy's sustained the bearish tendency, I'm going to aim for the 62.45, so on and so forth, right? Just like yesterday, eventually work and all the levels were reached, most of them. Okay, so these are the levels for the CL or oil. A break above 64.09 will deviate a push further up for a bigger pullback towards the resistance of 43, 48, 64.58, 94, and 65.14. You might have a little bit of a bigger one of a full reversal at 65.65 and 65.96. But by the looks of the momentum, I don't think so. Focus on sell setups only. Going into the NQ. Yesterday, I left 2 arrows here indicating the potential move support area. I deleted them at this point, but I left the arrows. Why? Because I need you to see that was right there. The first target hit right in here at 2 or 3 p.m. Eventually, the first target was hit, And then take a closer look on the overnight session. I'm going to extend this over here. And then right at 320, the second target was hit. These two arrows were pointing towards the bigger swings that we were looking for. And take a closer look how this huge swing, after hitting that target that we had yesterday, bounced back up again and then made a new low. So the levels are extremely powerful. The problem with this is that we do not know when will they be reached. Understood? Okay. And what's going on? Okay, that was yesterday. All right. Now, the market obviously sold off 553 points. Holy mother. So right off the bat, I'm just going to let it out right off the bat. I personally will not be trading today. This is too volatile for my style, for my stop loss levels, my acceptance of stop loss levels. It's way too overextended. So I'm not going to be trying to show off. I'm not trying to look, oh, I'm the whatever, right, of traders. I am just being human and saying, this is scary shit for me today. And it's way over my comfort zone in terms of taking my stop losses. Is that okay? Can anybody accept the fact that sometimes you have to know when to step out of the market? And it might be a great opportunity today, but at the end, on the other hand, it might be a great opportunity to lose a boatload of money today. So since that's the equation, which is a 50-50 equal opportunity to lose or win, I will pass. I'll probably come back tomorrow, or perhaps once the market closes and we join in the overnight session, that might be a good opportunity. Yesterday we grasped about 1,500, I think, on the Tokyo session, it was great, right? It was less noisy and whatever, and it was awesome on the NQ. So that might be a strategy there that you might want to apply, but this is my take at this point. Okay. So let's just, the analysis on the NQ, huge drop, obviously. Take a look at the correction. I mean, this is a 10-minute chart, guys. Look at the correction, 278 full points. I don't know about you, but no, thank you. This is great, right? So, there's a huge opportunities here, but let me show you what I say. They just say that we shorted anywhere on the break, on the way down here. Let's see this swing. This swing is just 59 points. Right? Ski, there are some of the brokers that they have removed it. That's the reason I'm saying, I don't know. My suggestion, stay outside of trouble. There's no need to force a trade when you don't have to. It's good to swing trade, or it's good to demo trade or switch to simulation or whatnot, or go fishing or something, or listen to Carlos. So because, just want to do something while having your breakfast. Anyways, the point is here, they just analyze the market. The first step that we do is the overall perspective. The market is on a huge downward move. And it's we call this the duh syndrome. It's going down, obviously, right? So now that we have the main tendency, the next step is to analyze the fact of the Elliott wave pattern. So, all right, so Elliott wave patterns are 1, 2, 3, 4, 5. That's number one rule. All right, so we're going down next. Well, identify the impulse move, and the impulse move are the first, the third, and the fifth. All right, why do we would like to know that? Well, because if you identify one big freaking huge swing, it means that you just identify either the 1, the 3rd, or the 5th, which means there is a highly probability that the very next upcoming move should be an ABC corrective mode. Wait a minute, isn't that here? What's going on? Yeah, it could be. So this could be wave 1, wave 3, or wave 5, and this is going to be an ABC corrective mode, or wave 2, or wave 4. Does that make sense? Awesome. So does that mean that this is kind of the beginning of either a 3rd wave or the 5th wave? It could be. We don't know, but it could be. So that means, all right, awesome. So what do we need to in order to confirm that? Well, the problem is that we are inside a no trade zone, which means the market is going to battle back and forth from the 22.75, 43.75, all the way to 39.25. So you got sellers on the top, we got buyers on the top. So it would be more advisable to wait for a clear close below this level, and then it will confirm the move towards the next support level at the 62.09 and 61.88.25 or 88.50. You're starting to see the power here. All right, I kind of makes sense. So, okay, impulse move, corrective mode. We're probably getting started on a big swing down, but if we get on board right now, we might get screwed because we're right inside on a very unbiased zone. Exactly. So you're telling us that it's more advisable just to wait until it closed below. And now that we have this tool right here, wait for everything to be above 150 under here and above 120 or 100 or even better 200 here to validate the main trend. Yes, that's what I'm saying. Awesome. So we just wait and we don't fall prey into the missing out of the opportunity because, oh, we left behind X amount of points. I don't care. I just care not to be inside of this craziness because this guy's just telling me that it's unbiased at this point. I'm not saying that you shouldn't. You can, but just rest assured, just like I did yesterday, I went inside the no trade zone just to have a closer, tighter stop, which was triggered, and I still was right on trend. You see the difference? Next time around, I waited for everything to close in, and then we saw a plus 20-something pointer opportunity move, isn't it? So it's rather being a little late but secure than early and getting screwed. All right. So far so good, guys. So you're understanding the price structure, okay? So main trend is down. Market is just coming back up into this area. This is important low at this point, important high right now. We identify this to be one of the huge Elliott wave pattern move towards the downside. That could be very beneficial and potential for us, which definitely it's just suggesting at this point a potential corrective mode and should continue on the way down. Price action structure is still sustaining to the bearish side, looking for sell setups. It's okay, but force and momentum is not there yet, okay? Force and momentum is not there yet, right here, okay? We just need to sit back and wait, which should be at 9:30 plus 20-minute mark. We should see some clarity of the tendency. In this case, we already know should be on the way down, and you already know that on top of that now you have the trend. You also have the potential of understanding how far will they go. 62.09, 88.25, 38, 85, 89.75, 59.92.25, 58, 35.50, and so on and so forth. All right, awesome. All right, so take a now I'm leaving on the left side here the glance of the market. Take a closer look at the glance of the market. What is the sentiment of the market? CL, ES, YM, NQ, gold. What do you think? What's going on in here? What is the sentiment? Right? Gomer, you got plus 7 and 20, awesome on CL. Great job. Target down is going to be 63.11, 62.98, so on and so forth. What is the momentum telling us in CL? Sell setups only, isn't it? Pretty daring awesome. So we just analyze pretty quick for everybody who follows the ES. Same thing, no trade zone, 38.50 to 50. 74 even. Price action structure bearish. The same thing will apply. The break below 74 will trigger the 54 50, the 32.75, the 98.25. All right, 78 and 58.75. All right, that's on the way down. Those are the levels on the way down. Okay, so look for sell setup. Price action structure is bearish. Huge impulse move on the way down. ABC corrective mode. So this seems to be a continuing format on the way down. Applicable preferably on the indices after the 9:30. And why you're saying that after 9:30 and not now? Well, it's there's no report coming up today, which brings me to bring the calendar on. And you can see here on the calendar that today there's no report, no high input report whatsoever. So, but they're just following through yesterday's situation. So it should be interesting to see how at 9:30ish, once the stock market opens, everybody should follow suit. All right, it's going to be difficult because of the volatility, but that's what the trend is. YM, copy paste, the same analysis. Copy paste, main trend down, sideways market, price action structure bearish. Let me switch to 10. Price action levels on the bottom. You see the two arrows indicating that the price action structure on the smaller time frames and bigger time frames are all pointing on the way down. So focus on potential sell setups at this point. We confirm with what? YM here, extremely bearish. Yeah, that's correct. So everything is aligned. Look for sell setups only. See how cool that is? It's a full-blown market analysis just by glancing at the charts. Let's just go to gold. Gold, extremely heavy, selling off, and long and behold, they just broke below the no trade zone. Let's see. Today, the break below 1340.20. They just reached the first target at 1338.40, 1337.60. And can we confirm the main tendency of gold? First of all, drop down to 10-minute. Give me a second. There you go. You see the arrows. Price action structure is bearish. On the bigger time frame, the right side is bigger time frames. That we're talking about 1 hour, 2 or 4 hours. Left side is like 2, 3, 5-minute charts. Bearish as well. They broke outside the no trades to the downside. They just reached the next support level. And on top of this, what is the momentum telling us? Look, oh, awesome. So it's just telling us right here to focus exclusively on the sell side. You see it? See how everything boils down into a decision making of the trend selection? So that's exactly what we're looking for. So far, so good, guys. What do you think of the full-blown analysis? This is what we call Trading Mission 2.0. We were just trying to bring you the best information available for you so you can take the best advantage of it on your, obviously on your trading. Carlos, will you just give me respect? Oh, thank you, Carlos. Yeah, sometimes you got to accept the fact that nobody should be trading. And unfortunately, it's just we don't control the market, right? We don't control the unexpected situations of the market, and we just have to adapt to it accordingly. But today is not, at least for me, is not a day to trade. Too crazy. I will take some questions at this point, and I will share with you. Many people who was being asking us, man, this it's so freaking awesome, this tool, whatnot, blah blah blah. How can we benefit from it? Unfortunately, we're not selling it. This is going to be part of your access to Trading Mission. So today, I am going to leave it on. We're going to test this for the remaining of the week, guys. We're going to test this for the remaining of the week. We're going to leave the tool on. I'm just pretty much, I'm going to mute myself here. The problem with this though is that this is my working computer. So we're working on a way to have the tools set up on a somewhere else, or we're working a couple things or kinks, but unfortunately we won't be able to allow anybody to have it. Once about, I would say, when was it? About a year ago, on the beginning stages, we only have readings of the first 2 glands of the 1 and 5, and we were testing out a couple of clients that we had. We tested out with them, and what happens? They try to go in, hack it up, and try to resell it, and all that crap that which I hate. So you know what? Unfortunately, because of those actions, then screw it. We're not selling it. But we're definitely going to keep it open here and until we find a solution. I'm not saying that it's a definite no, but it's certainly something that we need to address very importantly. Okay. Let me take some questions now. Where's it? Where's the clock? Where is the clock? It's right. Oh, it's right here. It's hidden in here. Oh, there you go. I'm going to keep this over there. And now you can see. All right. So 9 o'clock is the opening of the CL. Look for sell setups only. So even if they pull back up again, our job is to find a greater area to short this market. So basically you go in here, and the first thing that you have to do is just to say, all right, so the last pullback was 38 ticks. That seems to kind of a norm. Seems normal, 29, 22, 25. So I'm going to round it up and say that between 38 and what was a plus 29 plus 22, and just using 3 areas. I'm going to divide that by 3. A pullback of about 30 ticks will be advisable to expect some resistance. And 33 right there, just hit it right there and came back down. Okay, so that's interesting. It already did a pullback and came all the way back to 63.15. So the price action symmetry worked. Unfortunately, it's already, the momentum is gone. So now we would just have to wait until 9 o'clock. And if you want to make a decent potential outlook of entering this market, I would rather wait for a decent pullback and regain momentum back into the downside. We missed the first target by 63.11, which brings me the next thought process. I can think that if they come back down and test it, they can come back up again and become a little bit choppy. Unless they do a decent pullback all the way to the 62-ish level. The next pullback was 55, and we also see here this one right here, which is close to that 55. You see 63, 55-ish. All right, fine. So that means that I can look for a, oh, there you go. This is a 50 pointer on that point of control level. That's an order flow level, 62, and to 55-ish area. Okay, so I get it. So it would be advisable to wait for a pullback. Will it go all? I think so. Why? Sell setups only. Sellers are backing it up. Unless this M5 drops below 100, then I know the pullback is going to be completely available, and we should be waiting for it anyways. All right. So, mobile. Carlos, can you briefly describe how to read the numbers on M levels, average levels, how to use the things? It's just basically it's just a legend of information that we use, that we have outlined through the years. that, and basically what we're looking for, again, on each market is different. So I can't give you a specific on the other instruments because all of them it's difficult. We don't use, for example, M60 on the indices. It's way too overkill. We only use, what M60 is for CL, M15 is for the indices. Understood? So it's just a matter of for you to pretty much grasp your, how do you call this? You will evolve your own levels of decisive factor, if you will, if you kind of understand, right? Just by glancing at this, you say, all right, I got it. My system's telling me to go short. Now I can confirm it with X and X. And you by just glancing at it, you're gonna get it. But the way we use it is it M60 110%, 115? Yes, we're going short only. Sell setups only. All right, we move into the next level. We move up. So I need to make sure if there are sellers backing that main trend. Well, the main trend is sell, and is this guy's above 150 and 200? Yes, they are, which that means, all right, so that means that if I have a system, whatever it is that you use to execute on a short position, it is being backed up by the market. You see how it works? But you have to bring in something to the table. You have to bring in something to the table. Peter, no, we're not launching this on Facebook, unfortunately, because it's extremely difficult for us to measure people who cancel the membership. So we just have to dig in and boot them out, and that's kind of rude. And we're still working on the kinks, guys. So far, what we're deciding to do is we're going to test it out until Friday. What we decided to do is just to leave these open until the trade room hours, but we're probably going to leave it open. I don't know, for the remaining of the day until we make a decision of how exactly we're going to be able to distribute this correctly or deliver it correctly. But so far, we're going to keep the room open. I will mute myself up and off you go. Okay? So basically, I will keep it open just like so. And then you can just glance at it and use it as a tool. So that way you don't get distracted with all the other mumbo jumbo stuff. Is that okay? John Wilkinson, do you ever work with currencies? Yes, sir. We do work with currencies. We have another daily forecast video. For 10 years, we've been running that. ForesightFX.com, and we do a daily forecast video, and we run that we run every day. I record a forecast video and deliver it to members, and they just go in there and watch it. And it's swing trading, though. It's more of a swing trading for currencies. I don't like day trading currencies. So here's the NQ. As we can see, as I said, on the NQ, I would like to see the M15. It's the exact same kind of thing. M15 should be above and beyond 120 or 150. Isn't it? Yes, it is. The next level up is going to be, all right, so I need to have this guy above 150. Yes. This one above 150. Yes. Going short. That's a sell setup potentially. The next level down should be that 43.75. That's how it kind of works. The problem today, once again, I'm repeating it myself like a broken record, is extremely volatile. Is this crazy stuff today? You're going to get screwed if you don't place your stuff far away, unless you have the deep pockets in your trading account. Harold Freeman says the full set of levels for all instruments will be more useful. Yes, they're already available, Harold. You gotta get access to Chatsy, and they're right here. Look, all of them. We create this for you. We wake up 5 o'clock in the morning, start booting up this, and sometimes it's 7:30, and we're not even done. It takes us about 40 minutes, 30 to 40 minutes on each one. All right. You can use those. Oh, okay. You just mean leave it as it is? Leave it as it is, Harold? Just leave it as it is right now. Got it. All right. No issues. As long as you guys understand how to read it, that's no questions. All right, so let's just wait until pretty much 9 o'clock, see what CL is going to bring in. Probably 15 minutes is going to be a little bit more applicable today. And $32, too much. Next level down, 63.11, 98, and 62.45. You can see the momentum readings, sell setups only. Obviously waiting for 9 o'clock to bring that in. I would venture into identify probably 63.20, the 2080 rule. The 2080 rule indicates a, I don't know who came, but I learned this from one of my mentors, but basically he mentions that typically they like to draw attention towards the 20s and 80s, and you should see some reaction or swings or counter trending happening on those levels. I'm talking on the CL. So if that's the case, and we identify, for example, you can see here the 80 level, right? And that's pretty much the transition point. The 20 level right here is in this actually the transition where they held. So it's interesting to see those levels being drawn into their into their interest of the price structure. Here's one right here that we don't label it, but it's interesting to learn from it, because that way I know that if they go through this target on the way to the downside, I know they might encounter some sort of support right there. Agreed? So this is something for you to write down, and write it down just like, hey man, you know, I'm just sharing this stuff with you, and it cost me a lot of money to learn it. It's kind of, sometimes it's weird, and sometimes it's just like this little nuggets that you say, what? But take a closer look. If you go into the top side, look, I'm not kidding. Look, you see the 64.20 here? Check this out. Isn't that the top right there? Isn't that amazing? And then the market just drop all the way down. Here's the 20, and here's the 80 right in there. So you went from here to here, and take a look, the actual market bounce in that region. It's interesting. It's not a 100% science, but it's absolutely something that to keep our focus on. Here's a 65.20. Take a look. That was the actual high before the huge drop. Look, 65.20. It went as high as 27. Freaking awesome. Here's the 80, 64.80. That's pretty much a point of control. Interesting. Then the 64.20. Look, that's the high on the pullback right there. Powerful stuff, guys. So there you go. If you're visiting for the first time, at least you walk away with something and you say, all right, I didn't waste my time with these guys or these clowns or whatever you want to call this. I don't care. Still love you. So the point is here, NQ going down. You see the sell-off? We mentioned it. All right. Is it above 100 and 120, 150? Yes. This guy's 150 to 100. Yes, going south. Next level down. 44 in this case. Let's see if we can just put that perfectly where it's supposed to. Hold on, guys. Let me answer a question here. Juan, you there?
Here.
Suggest Jared not to take trades today, man.
All right.
All right, sorry guys, got to take care of clients here. Yeah, a lot of people asking, should we? No, if you're doubting yourself, don't. All right, if you started to say, should I? Nope, that's the answer. Should, no, no. You see, no. That's what. And I remembers my mom. Should, no. Get in there, do your homework. And the slap. I remember those. Schnuck. Schnuck. I think we should apply that. Carlos, shoot, no. 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 Get your hands off that mouse. I'm just kidding. You do whatever you want, guys. I'm just trying to make this fun. All right, so far so good, guys. Do you have any questions about the analysis? The first part, let me just so let's just explain. Obviously, I know there's probably like different areas. Tony, you're yeah, that's one of the secrets. These guys are, as you said, is a fund manager. Basically, that's what they do. They manage when not to do things. Isn't that awesome? All right, so we have two parts here. We got the levels, right, and the no trade zone that help us tremendously. Then these at least tell us when not to trade or have a kind of a little bit of a difficult area where the probabilities are a little bit not in our favor. We already have that, right? So it's like this. So, okay, we got that part. Next, then we have an extended reaction when the market breaks outside of these regions, right, to the either up or down. Then we have what we call levels or targets. Agree? I call them levels. Let me explain. This is interesting. Hold on. Let me go to CL. Let me explain. If let's say, okay, here's an example on the upper side. Let me do erase, click. There you go. Let me show you. This is important. For me, this is an important high. This was the important low. Agreed. This was the pullback. Yes. And then they just made a new low. Let me explain. When I talk about the no trade zone, for instance, when the market broke to the downside, this 63.11 or 62.98, those are what we call targets. Okay, why? Because they are a new level beyond the most important swing low. This is a new low. Understood. meaning those are a target. And those targets are influx of potential buyers, order flows against or floating orders against the main trend at this point is going down. Understood? So whatever is beyond the most important swing, in this case, swing low, we're sustaining a bearish outlook. If we break that low, this become a target 1, target 2, target 3. Let's just go to the upside now for a moment. If we reverse and we break to the upside, this is the important high as an example, which means these are not targets. These are objectives to reach. Targets are whatever is happening above and beyond that swing high. That's going to be the main target, because the idea is for the market to break through new layers, right? And reach those tendencies or new grounds. This is how I refer to them. So for instance, it's just a technicality, but what I'm trying to do is, like, sometimes I tend to swing for targets and forget about the objectives, and these never reached, and I end up losing money or giving back the profits. Okay? In other words, to simplify things, once they break outside the box, take whatever your objective is and whatever the next level is, whether you call that target, objective, or whatnot. I'm just saying because sometimes I refer to them and people say, oh, but wait a minute, why do you call this objective? Or it's the same thing. I'm just saying. It's just that I like to see whatever is far beyond the important highs or the important low. That's what I'm personally trying to aim for. This is too far away, so that for me is kind of a no, never going to happen. So obviously I'm going to focus on this one. So this one will turn into my personal objectives today. On the way down, obviously there's nothing lower than this, so they're making new ground. So that's going to be my target for today. You see, my target or objective today is to reach this target, whatever you want to call them. So I don't want to confuse you. I just want to create your own label, and don't listen to me and get confused. All right, so we're going down, and CL, obviously sell setups only. I'm on a 50-minute. Let me drop this to 5 minutes for a moment. Pulling bar technique. Okay, in a moment. I'll go over in a moment. Very unstable grounds here. Here's a quick question, everybody. Where should we aim to do on the CL? Come on, pretty quick. You got 5 seconds to say, all right, what we should be looking for to do on CL. Come on, quick. William Ross says, hello, William. Says wait. Yeah, but just by glancing at the tool on the right side, what is your focus? Sure, exactly. Look, right here again, guys. M60, is it negative 115.20? Yes, way far beyond that, 300%. Awesome. And are the sellers stepping this up, backing it up? Yes, we got over 150. Yes, over 150 and 200 as well. Yes. Awesome. So what do we do? Boom. Focus on sell setups only. Right? And now you move into, all right, but how far will they go? I got it right here for you as well. So we got everything covered for you guys. If they end up moving further down, that's the next step. This is the next step, and we continue going down or further down. And then this is the next step, right over there, all right? Hey, but Carlos, how long can we expect for this to happen? God, I have no idea. I wish I knew. Then I would be gazillionaire. Here we go. They just broke that 4 times bottom on the downside. That's what we call a pulling bar technique. Let me go back now and explain what a pulling bar technique is. All right, awesome, more stuff. Wow, we're learning a lot. So basically the market making a new lows, right? You see that? Boom. Once they broke through it, this is the next layer down. This is the next layer down. Well, that happens. Exactly, William. You got it. Everything, you wait for everything to line up. If you get stopped out, it's because you didn't make a mistake. It's because, or it's not working. It's just plain and simple. The market is probably too volatile. They went for the stop and that was it. Okay. We're trying to, let me explain something here. Very important. What we're trying to embark today, guys, is to explain to you how to extract, not eliminate. Let me rephrase that. I'm not eliminating. I'm minimizing the emotions out of your trades. Does that make sense? What we're trying to do is minimizing the impacts of the emotions on each trade. And on the other way to look at it, all these amazing tools that we have here, the levels and the no trade zone, these are all created to enhance any trading system that you might use at this point. I'm just explaining things in the 5-minute chart right now. I use 10 minutes WB, just in case. All right, so does that make sense? So everything that we're providing to you is to enhance any trading setup or system or methodology that you have. And as a byproduct, will help you minimize the exposure of allowing the emotions taking control of your trades. Does that make sense? All right. Okay, next question. I'm going to explain the pulling bar in a moment, but the next question was what the M's represents. It's just, once again, don't put too much attention to it. Just focus on the numbers that we're telling you, and that's it. But basically, these are based on minutes, but it's not a minute. This is not based on time frames. This is based on the amount of minutes from the last tick. So let's see. Let's just wait for another. Oh, there you go. You see that tick that went from 15 to 24. So it's just reading from this last change of tick. It goes back 60-minute worth of ticks, or in this case, 5 minutes worth of ticks, and doing an average and whatnot, and give me a percentage right in here. That's what it is. Don't ask. Guys, do not rely too much into this stuff. Just use it. Don't try to find everything. I need to know. No. I mean, you know how many people that I know that they're like making so much money because they just take action and don't ask? It's just amazing. I know, because I'm kind of a perfectionist, so I'm screwed there. So I kind of understand your points, but I'm just saying, just learn how to use it. Don't sweat it. We already did the hard work for you. Oh, WB, 15 minutes, most of them. 15 minutes, most of them. 15 to 10 minutes, most of them. It's either 15 or 10. Doesn't change so much. Okay. So what was I? I was about to explain something, and I got my thought process. Well. Okay. Very impressive. This side doesn't hurt. Okay, I was about to do something. Let's see, I got a couple up here. Ah, yeah. Pulling bar technique. Thank you. Darn it, I got drifted there. Juan, can you answer a couple of the questions, please? Well, I'll do the other one on Chatsy as well. I appreciate it. Okay, so pulling bar technique, guys. Don't worry, we're going to try we're going to explain everything in a moment. Give me 1 second. So let's just go on with the pulling bar technique. Okay. 1 second, guys. Too much stuff at once. All right. Let me explain what a pulling bar techniques is. The pulling bar techniques. Let's just take one swing like to the upside, right? So the market is coming down. Just, you know what? I don't like this. Let me go. I'd rather go like this. Come on. Give me a new canvas. There you go. Here's a new canvas. Now we can explain it. All right. So the market goes into a downtrend so far. Agreed? I'm doing a class now. This is awesome. So this is a downtrend move, right? So a pulling bar technique, assuming this is a bearish because it's exactly what we got here. What we need to do is wait until the last pullback bar, this one that makes a low or the valley, right? Am I saying that right? On the valley right here, right at the end, start doing another corrective mode. Once I start to see the very next bar breaking the high of the lowest low bar, I know we're on a pullback, which is great. And then I'm going to give you a kicker on this because you can tell when this is going to happen because this guys right here start dropping the percentages. What, you bastard? Is awesome because you can tell when this is going to happen. So, but anyways, the thing is that you can say, okay, so price structure wise, they took the high of the lowest low. So we're probably on our going into our pullback settings. So the next bar comes in, opens up, makes a low, whatever, and makes a new high, taking that bar high. As long as we have 1 and 2 bars after the lowest low bar, I call this a pulling bar technique, which means that as soon as this bar closes, right, it opens in here, went back and forth, back and forth, back and forth, got it? And it closes right there, making it kind of a higher pull number, right, a high right there. The lower part of this bar, the low of this bar minus 2 ticks, all right, minus 2 ticks represents the potential entry. Technically speaking, the next bar opens here, makes a high, does not make a higher high, by the way. So I'm going to explain this setup first, and then makes a low. So there is no trigger. Then the next bar opens up, makes a high, doesn't take the new high, the previous highs, and then breaks down, and that would be the entry point. Your stop is going to be plus 3 ticks. I mean, you can use whatever you want, but above the higher high that they just left behind. That's scenario 1. Understood. That's what we call that. And then this is a price action structure trend tendency. And if it just happened to follow through with the main trend, bingo, you got a price action transition in favor of the main trend and momentum. What else can you ask for? This is awesome. So that way, why do we develop? This is not mine, by the way. I borrow this for another one of my mentors. So this is, I didn't develop this, but it's really awesome. So why we use this? We use this because a lot of people are using Fibonacci's or all these other really awesome tools that we use. But sometimes, let's just say you're waiting for a 38.2% retracement here, 61.8, so on and so forth. And all of a sudden, you just waiting and waiting, and you say, crap, they never pull back to that area. What? Fibonacci doesn't work, right? So that, how many times does that happens to you, right? If you're using Fibonacci's, right? So what happens is you need to use price structure to validate the transition and the force within it. That's the reason we developed this, to identify that there is a high probability that a pullback might be short-lived. So we use price transition or price action structure to as a transition signal to go in with the market. Does that make sense so far? Yes or no? So it looks like this. All right. Down, boom, boom. All right. So we got 1, 2. And then this one closed. Now, this is the next scenario. This is the next scenario. Listen, if the next bar comes in and takes the previous high, then this is canceled. There was supposed to be the low of entry. Now that's canceled. Now this is a new king in the pullback, and this is a close. That's the high. This is a low. Now the entry is right here. The next bar opens up, makes a low, doesn't trigger the entry, and all of a sudden, boom, makes a new high, and it closed. Cancel the previous one. Now this is the low to go short. -2. It takes until boom, it hits, and there you go. Okay, so the same thing will apply on the reverse. Right, so 1, 2, then I'm gonna go back in here. The next bar makes it lower, cancel this one. Now I'm gonna go long up over here, and then the next bar makes a double bottom, which is great, which is still valid in here. The next bar comes into play and triggers it. That's the entry. This is a stop, and so on and so forth. And then hopefully all of this is on the green side. See, and the arrows on the bottoms are pointing upwards. Isn't that awesome? So there you go. So that's the pulling bar technique. So it's more applicable and it's more powerful when you use it. I use it on the 10-minute bar. Why? Less noise, less fake outs. But they work. Here's an example. Let's see. We can find an example. Is it 100% foolproof? No, you're going to get stopped out more often than not. Right? Period. That's how it is. The bigger the time frame, the more powerful it is. Repeat that with me. The bigger the time frame, then the more powerful it is. Does that make sense? Yes? Okay, just learn that. This is part of a course that we haven't been able, we haven't actually had a chance to actually pull this up yet. All right, so you apply it in whichever way you like it. Hey, Kevin, come on. I'm not going to repeat that, though. There's always somebody. I like it. Gomer, yeah, you can do so. If you have the capabilities, let's just do it. Let me know. All right, 8:49. Let's just take a glance at the market sentiment. Click, and here we go. You can see now the top side is losing momentum. Obviously makes sense. We're closing into the opening of the oil. Kind of makes sense. Market is on a pullback. You see how it works? Strong downtrend on a pullback. Strong downtrend on a pullback. Yeah. All right. So go just send an email, and then we'll probably can take it from there, or maybe Skype. It's easier for me. All right, so Tony, yeah, that would be good as well. Sorry, I didn't catch the comment. Um, the numbers, William. I'm a bit late. William says the numbers on the right. The Once again, guys, this is the tools just represents a force of momentum on a certain direction, and we want to focus on the lower end. On the CL as an example, I want to see the M60 above and beyond 110, 120% for identifying the main trend of the day or session. Everything can change eventually, of course, but that's what I want to focus on. The lower numbers here identify the commitment of traders behind the main trend, right? And I want to see these numbers. I want to see these numbers right here above and beyond 150 and 200% or so. Okay. Um, okay. So agree. Got it. Oh, man, this is just got screwed now. There you go. It's big. Too big. So on the side of NQ, we have kind of a similar scenario, but since the NQ is extremely more volatile and very erratic, we need to use lower time frames. So I would like to see the M1 to be on the, once again, 150 or beyond, which is positive right now, indicating the pullback is undergoing. The M15 has to be above and beyond 150 to confirm the strength of the main trend, which at this point is losing momentum. So in other words, this is telling me sit aside, don't do anything, because we have no commitment nor to the sell. Long-term perspective bearishness is slightly bearish, but it's not above and beyond the 110, 120, right? So it has to be far beyond that to sustain the trend. Right now, it's unbiased. It's bearish with a decent pullback undergoing, so standing outside is the best decision. You will see that by the time that the first numbers here start dropping towards a negative 150, this guy should continue down, and then we should resume all efforts to look for sell setups. On the and that goes in sync. What I just explained here on the NQ is the exact same thing on the indices all across the board. Gold, on the other hand, is similar to the gold is similar to oil, so this is kind of the same readings in the commodity side of things. In the undergoing the M60 being kind of the strongest commitment at this point, in M15 as well. So there you go. I'm gonna wait until 9 o'clock, and we'll wait for a moment. Okay, be right back. I'm gonna take a little bit of a break and be back in 5 minutes. All right, guys, so we're back. All right, 9:03. Let's see what's going on. And let's just start reading this for your benefit of understanding how this works. So glancing at the NQ here, strong tendency, long-term perspective still bearish. You can see the arrow on the bottom. It kind of makes sense. We're just on a decent pullback. Remember, take a closer look. This 10-minute pullback, 95 points. No, thank you. The only one strong enough is gold at this point, but it's really erratic as well. So the next level of potential target based on the way that we see the readings here is 3580 and 3420 is purple, which means it's 5 times confirmed, which is have a high probability of being reached. And by reading the momentum here, seems to me like they might sustain it and reach it eventually. We can see here CL on the pullback, so nothing to do right now, just standing outside. There's no need to force ourselves into guesstimating what's going to happen. NQ, the main trend in NQ, you open the chart, it's just plain and simple on a pullback area. Unless they break that 39.23, then we'll become buyers or consider becoming buyers. And the momentum reading here is completely dead. Is it M15 above 110% positive or below 110 negative? No, which means don't do anything. Sit aside, go get a cup of coffee and Duck Donuts and send a box to Carlos. Duck Donuts. It has to be white powder on top of it, and that's the one that I like, plain, and that would be good. Let's see what else. Sit back and wait. Patience. All right, so far, by a show of hands, guys, do you think it is valuable enough what we showed you and share with you for the first time in 4 years? Actually, 3 years, yeah. Olivia, yeah, hello, Olivia. Yeah, you like Duck Donuts. That's awesome. All right. Oh, yeah. With a very strong, yes. All right, Barry, you love it? Awesome. Great job, guys. As long as this helps, that's all we care. Good. So while this evolved, I got, dudes and dudettes. We have today, we're doing something really freaking awesome. Of course, we're obviously hoping that a lot of people think this might be beneficial to you. So I'm not doing the pitch fest right now, but I'm just letting you know we have something that we haven't done before, or at least that I know of. We're gonna offer you guys, we're for this month only, because I need to test the validation of using the momentum tool that we have here. So we're slashing 1 month in terms of the sure exactly what is it that we came up with. Jimmy, can you, if it is okay for you to just let me know, because I don't want to say anything that is not right. For those of you, I'm going to keep this open though. I'm just gonna, because I got a couple of comments here and go to webinar about what exactly, how you can buy the tool and acquire it. Unfortunately, no, it's not for sale, guys. The tool is not for sale, but it's going to be part of the membership. How's that sound? Yeah? Boom. Booyah. Awesome, Olivia. Thank you. So what we decided to do is to bump up the value. Ooh, isn't that a song? Bump up the value, bump up the value. Hey. No, it's volume, not value. What am I talking about? Puerto Rican. Anyways, so basically what we're trying to figure it out, a way to provide you this tool, because I will guarantee that once you learn how to use it, obviously the way that we designed it to use it, we are not the creators of it. We joint venture with the actual developer, and we designed it based on our needs. And the guy just, you know, he's even amazed how we were, you know, what we were being able to do with it. Okay, we're doing a special offer for this week if you use, okay, there is a backdoor promo code. Wow, UN, okay, whatever that is. So it's right here. Check this out. We have this code, and you will get $1, $100 off in your first month. And the reason being, and please, members, don't get uncomfortable with this. Just we need enough people to validate the value of what we're providing here with adding this software access. Understood? Did you got what I said right there? So that's the purpose of it. So I know sometimes price could be kind of a stopping factor, but guys, come on, it's $197 the whole month. You can cancel anytime. I don't care about your business if you're not worth your business, right? It's just walk away, cancel, and that's it. But you're gonna have access to the training, the 2-hour training course that we sell for $297 separately. And that will be the first step. Obviously, I need you to create a plan and understand the pricing or the profile of the market, which goes in sync with this bad boy right here. Once you understand how to read the price action and the timing sequencing and the best opportunities on each one of those each one of those markets, then everything will change for you, because you will understand how to read this, guys, and be patient and expect the most. The next thing is you're going to be able, listen, by using this tool is how we are able to pull, where was it? Where's the, hold on, let me see. Where is the screenshot of yesterday? It was right here. The reason this is the reason you're going to be able to pull things like the following. Let me show you. Wait for it. There it is. Here it comes. 62 pointer on the first the first target, and then we got the next target down. And I know some of you actually saw it because I had it over here yesterday. I don't know if it went away already. but I think I posted it here last night, somewhere in there. You can go back and check it out. But you see the 60 pointer? Why do you think I was able to hold for this target? You see the force and momentum backing things up? I had the conviction, right? I was comfortable enough to say these guys are going further down. The reason I kept my stuff far away and let them do its thing until they reach the targets, because the tool is just telling me hold positions to the downside. But how far will they go? Well, they're supposed to go to the next level down, 25, 19, 13, and so on and so forth, right? And if you take a closer look here, right, 64.13 was one of the latest, and 64.13, it was where? Right in here, look. So we were able to pull off all those targets because we had this tool to let me know hold positions were going further down. My job was to trail the stop until I either get stopped out on my trail stop or the target that I decided to go for is either reached. Does that make sense? You see how powerful this is? And this is what I want you to do eventually, to be able to create confidence in your decision making, in your system, in your trades, and be able to hold for bigger targets, because now you know the commitment of traders behind it. Isn't that powerful enough for you to value what we're going to be providing you guys? That's what we want for you. All right, so there you go. Now that I got that off the line, back into analyzing the market. All right, I don't want to, I mean, this is business, obviously, but I just don't want you to, we're not here to, hey, yeah, I want to sell to this shit or whatever. No, the point is we're trying to build a huge community of savvy traders, and it took us a while to figure it out if we shouldn't, but we decided to go for it and give it a shot for 1 month, depending on the reaction. And obviously the success rate of you guys is the decisions that we're going to be making of keeping this tool alive and available, or just take it off the market, at least off the membership. That's what I mean. That would be great, Gerald. Yeah, the video, yesterday video is available, so you shouldn't have any issues to review it, guys. Okay. So no problem with that. We teach a lot. If you notice, we would like to learn. I mean, I would like you to learn as much as possible by, following, most of the explanations that I do on price action. And I think it's beneficial. A lot of people just commenting that they learn a lot from the price action teachings that sometimes we do, or lectures. All right, so back into the charts here. CL, if you notice, let's just understand CL, there's nothing happening at this point. There's just pretty much finishing the pullback. Once I see M5 above and beyond 150, I can start gauging the fact that these guys are done with their pullback, and I can deploy what we call the pulling bar technique, okay? All right, Kevin, awesome. You're in. Welcome, man. Welcome back, actually. So on the other hand, the NQ seems to be doing or geared towards a bigger pullback. You notice Just by reading the commitment of traders, these guys are bullish at this point, while the bigger time frames or the bigger momentum, so to speak, the bigger time frames, the bigger time frames on the bottom, it's just hidden behind that. I need to fix that, but it's still bearish. The lower time frames here is bullish, so this represents very lower time frames, like 3 minutes. I think we use 3 and 5 minutes, and this it's just applicable right there. You can see the buyers are stepping in, and the M15, which is kind of the M60 for us here, is dull. It's completely dead. The threshold, if you will, is negative 110 to 115. Maybe you can do 120, doesn't matter. It's just so much that it's even better give it a little bit more, 120-ish to positive 120-ish. So as long as the market sustains itself within that range of 120 plus or minus, the market is unbiased. Agree? Understood? At least on the NQ. Eva, yes, it's being recorded. Eva, I see your name, and I remember like 2 days ago we were watching Wally. Wally, you know Wally? And I just remember that my kids, we were watching Wally. I like your name though. I like that name. If I ever had a girl, I will name it Eva. That's for sure. Come here, Eva. Give daddy a kiss. Oh. I think CL is getting weak. All right, Eva, welcome. Is green red arrows made from M levels? No, Freeman, it's from price actions. Everything that we do has to be either based on volume transitions or price action, nothing else. I don't believe in anything else. Moving averages are good, but they're lagging. You need to learn how to use them. I like to use moving averages on bigger time frames. It's easy to make a very awesome trades with moving averages, but you don't rely them on the crossover. That's ridiculous. They're lagging indicators. By the time that they cross, the move has already happened. So I don't use them that way. I use them to confirm a main trend tendency. Okay. So these guys are getting tired. Double top formation on the CL. Seems like CL is about to start doing its thing. No, let's wait. Here he goes, the CL, M5, 112. You see how this is looking? Really awesome. So let's just focus on this one for a moment. I just studied. That was the pulling bar entry right there at the 63.33. All right. The thing is this guy's above 150. Now he's not. But it's just giving you kind of a glance. M60, 300%. This is really good, by the way, in terms of long-term perspective. Already 921, but 930 is coming up, just like yesterday happened. But I got confirmation that the market just pretty much are tempering with the low part of the no trade zone again, right? So this is a potential sell setup on the CL. I just would like to see M5 above 150, M15 above 200, and that would be pretty much it. The stop should be on the swing side of things, like in the top side here. If you're kind of, let's see, It's a 21 tick. Maybe you can use that. That's a reaction of it. A lot of order flow traders don't like that. They say that that's ridiculous. The stop should be pretty much at the 40 to 41. But I'm a swing trader, right? That's for scalping. That might kind of make sense. And in reality, the transition of the order flow happened right on the top right here, anywhere between, I would say, 48 to 51. And that's great, but that's kind of scalping. The way that I see it is a validation of a sell setup, 200%, and this guy's at 150. There it is. That's a confirmation. So let's just mark the 31. I'm not trading it because I want you to focus on what's going on. As I said, the market is too volatile for my taste today. So anyways, this is a target 1. This is a target 2. 1, do we have any new targets in between 98 and 45? Just let me know. Just use those 3 for now. I'm on a 10-minute chart. The problem is 9:30 is coming up soon, which makes things a little bit, it's just crazy sometimes at 9:30. But let's just follow along here. YM on the move. Where's YM? Okay, over there. So you can see ES gaining strength. I saw the 200 mark on the lower. I mean on 5. I don't know why I use on 1. So yeah, it's all getting weaker. Nothing on the NQs. It's dull. It's unbiased. Nothing there yet.
$62.73 red on oil.
Thank you. That's a new target. Thank you, Juan. 60 through 73 red. Red, it's just before you ask. Red is the identification of which time frame. We color code the time frame. So this is a big time frame. I think it's a 2-hour chart. Mm. 300% ES going on the south side. Next level down 54.50. Pre-opening push. Interesting. Welcome, Richard. You signed up. Awesome. Nice to see you inside. All right, so let's see what 930 will bring in here and how it will react on the CL. Everything's bearish at this point, but once again, this guys can push all the way through. M6 is still being bearish, and this is just a bigger pullback, just like what happened yesterday. So at this point, I'd rather wait until I see M5 in the 150, M15, 200, and this guy sustained itself into the higher ground. And clean close below the 34 would be even better, because then that means that they retest and close below the no trade zone. Does everybody have access to the charts? Yes or no? Does everybody has access to the chart? Please make sure, guys and girls, make sure to download the charts. We spend a lot of time on them. Click on them, and what you can do is right click, open a new link, and then you can do this. You can right click, save image as, and create a profile of it. That's what a lot of members do, and they go back to back, and keep adding it. I spoke yesterday with Kevin. He gave me a good idea of a software that we're trying to see if we can just work it out. And yeah, we're working on it. So for the levels as well, but. All right, so what the heck? All right, a few minutes. Standing by. William, do you intend to develop for Sierra charts? It might be something on the look. We have to discuss this with our coder because we have a very strict NDA with one coder, and I need to ask to him if he can do other ideas. We already have it for Ninja 8 though, which is the one that I think we will be releasing. But so far. All right, guys, so 930 is here. Huge sell-off on the NQ. There it is. 375. Next level down is going to be 44.75. We're inside the no trade zone, of course. All right, guys, so anyway, there it is. So 150 and 200 again, second time. So once again, the 63.30 was the key factor there. Levels down should be 63.11, 62.98, 62.73. All right. Full reversal on the NQ, full reversal on the CL. Yes, Keith. Yeah, that's how I said. Remember, the indices is applicable to trade them 20-minute past, right? Standing by, guys. We're just watching here. You can see here that things are changing, right, so far. But based on price action, we're still below the swing high. A break above 39.23 will represent a recovery on the NQ, and you already know the targets to the upside. Same on the CL. Te digo ahora, 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 te digo ahora. Go. Hold on, guys. All right, guys, you can see everything extremely bullish at this point, and we have over 120, yes, 200, 500%. This is definitely a full-fledged potential bullish tendency on the NQ. Obviously, we got to wait until 9:45ish to make sure, but check this out. They just take this one step at a time. YM broke outside the no trade zone. Next level up, 24.28. Will it reach? You go here, check YM, 600%, 380 something, 150. Yes. Next level up, 288 and 534. Let's just go with the E-mini S&P. E-mini S&P is about to break the no trade zone. Can you follow it? I'm just explaining to you how this works. All right, go back here. ES, 500%, 200%, above 150. Yes. About 200. Yes. Above 110, 120. Yeah, it's almost there. Obviously, if they break above that 38.50, next level up, 64.25, 73, and potentially 13.25. See how this works? Now check this. Check the gold all day long. Gold was saying go to short positions only. Boom, there it is. You see it, guys? Are you paying attention to this? No, I'm not taking trades today. If you just came in now, please, no, I said I will not take trades today. Below the no trade zone, 13.40.20, boom, first, second target. The market was pulling back. We noted that we were going to go short on gold. Yes, remember, yes or no, guys, that we talked about it earlier. So because I need you to pay attention to it. Peter says 1,201 contract on ES paper trade. Hey, it doesn't matter, dude. Just take it. You did the excitement part of taking the trade. It doesn't matter if it's real or not. So there you go. Once again, you come here, gold, all negative, all across the board. Focus on sell setups only. Guess what? That's exactly what it did. Third target, second, third target of 34, purple level. We should see some bounce, but it's strongly bearish. Next level down, 31.70 and potentially 25. Can we hold that position if you're trading gold? What do you think? What do you think? Please share it with us, guys. What do you think? All right. Let's see. All right, YM. Notice YM, guys. YM. Told you, right? YM. Can you see the power of this? Broke outside the no trade zone. Can we follow it? Just take a glance on the right side, on the left side right here. 600, 400, yes. Target is going to be hit. Boom, target hit right there. Same thing will apply on the E-mini S&P. Can we follow it? Yes, we can. Next level up, 64.25. Obviously, we already talked about gold. Now, NQ following suit. If ES is just moving further up, NQ will follow suit. Above 39.25, trigger 57.25, 79, and 99.75. Never mind. All right, target hit on the YM. Next level up, ES. Next level up, ES. Can we follow suit? Yes, it can. Next level up, 64.25, 64.25. New levels on the oil. Broke outside the top of the ledger right there of the no trade zone. Can we follow suit? M60 is not there yet. M60 is not there yet, but these guys are extremely strong. So I'm just glancing at this area, and we can probably take a kind of an aggressive entry for it. It could be a possibility. It could be a possibility. Next level up, 64.40. I mean, 64, yeah, 43. Going up next. This guy's just lost a lot of ground, so this is a continuing upward movement on the CL. Next level up, 64.40. Once again, I'm concentrating today and showing you how we read this stuff so you can benefit from it. NQ taking a breather, moving down to 5 minute, looking for a pulling bar technique entry. Extremely strong tendency in the lower time frames. Next level up on CL should be the 64.43, 48, 58. So yeah, my NQ just got screwed. Yeah. Sorry guys that I just messed up the NQ chart. So let me see if I can. Remove. Oh my God. Yeah, the NQ data is just crazy. It's not loading. Oh, there it is. Wow, took a while. All right. Yeah, that is just, here we go. Here we go. That's a 39.25. Back it up by everything. Look, almost 200%. Next level up on the NQ, 57.25. Next level up on the ES, coming up next, 64.25. Guys, are you following? Yes or no? Are you following? Yes or no? I'm not taking the trades. I'm just explaining to you how to read the tool. And the levels. We're using everything. Isn't that awesome? Oh my God, this is all at once. Can't take it. Too much.
I just sent you a screenshot of the volume.
Oh, let me take a look at that. Yeah, 1.7. That's freaking awesome. Extremely volatile. 152 points in the NQ. This is definitely for big players. All right, so I'm sticking here until we reach the levels and we're done, okay? So that way I can pretty much, you know, show you the whole process. Gold on the negative side, next level down, 31.70. Now, pay attention to how smooth the ES and the YM are in comparison to the NQ that comes back and forth, right? It's really interesting. $2,000. Wow, again. Okay. It's crazy, right? Check it out. Juan, we got confirmation on I got confirmation. 57.30.25 coming up next on the NQ. 64.25 coming up next. 3, 2, 1. Hit it. There it is. There it is. All right. Target hit on the ES. Coming up next, the YM. Target hit on the NASDAQ. All right. Guys, are you excited about this? This is really awesome. Next level up on the CL coming up next. We got everything backing it up. Yes, we can go for it. All right. I'll be okay. It's starting to become clear. You are like our own analysts and we're decision makers based on our own variables. Absolutely, Gerald. Gerald, you got it. Jack, we've been doing this for quite a long time. So it's just a matter of, testing it out, okay? It's just a matter of testing it out. I know that today is easy because the market is volatile, but it's not that easy in reality. That's what this is. The commitment of traders software is telling us. This is the commitment of traders. That's what it is. It's telling us the commitment behind the actual main tendency. There's no deviating from it. period. It is what it is. You got two analyses here. They broke outside of the no trade zone to the positive or top side of the ledger. We're going up, target hit on the NQ, and it's backed up by the commitment of traders. Next, take a look at the A-mini S&P. They broke the top side of the no trade zone. They should go for the next level up. Validated? Yes, they reached. Next level up, 73. Next level up, 73, and it's just backed up by it. Next level up on the 79 on the NQ is backed up by it. Target hit, the first one, the YM. Look, boom. Next target has been hit on the YM ahead of the time. On the top side of the no trade zone, first, second target hit, and it was backed up all across the board by the momentum indicator. All right, let's see. Let's see. Any moment now. Nobody knows if it's going to reach or not, but at least you have the momentum backing it up, saying it will. Boom, target hit on the NQ. Again, next level up, 99.75. We should see a little bit selling pressure going in there, or a burst. There is the burst. Boom, second target hit on the ES, going up next for the next level up. All right, do we have another level on the YM? We do. Do we have confirming tendency behind it? We do. Let's see. Next level up on the ENQ, 99.75. Actually, 99.50. It's 99.50. Next level up on the ES, 13.25. And with this, I'm going to conclude the session. Gold, extremely negative, going down. Next level down, 31.70. Can you starting to see the process here? Multiple layers of indication of of the precise areas where we should be focused and aiming our focus on. Granted, yes, today the market is extremely volatile, which helped us see the results faster than usual. That's for sure. I'll take that. That's for sure. Target hit, third target hit on NQ. Boom. The only one that is hesitant to break through is the oil. Guess what? Can you tell the reason why? Look, because M60 is not completely on 110 positive. You see? Meaning it's thinking about it. It's thinking about it. You got it? But still, it's positive. So next level up, 43, 48, and 58. 58 being the purple, that's the one that we should be aiming for any moment now. So it's lagging a little bit behind, but should go there. Anna got 10 point on the ES. Awesome. Sven got 10, 3 lots. ES. Sweet. Awesome. We hit the 3 targets. Guys, come on. Take a look where the market stopped. 99.75. Are you kidding me? And it's coming back down on the NQ. $35K J on all indices. Great job, my man. Guys, basically, in terms of objective, right? We have fulfilled most of the objective. Can we agree? Yes or no? Broke outside the no trade zone, target 1, target 2, done. Broke outside the no trade zone, target 1, target 2, done. Broke outside the no trade zone, target 1, target 2, and now 3, done. Got it? The only one that is hesitant to continue, but still on the positive side of the ledger, is a CL. And I take a closer look here. And the reason it is not moving with so much conviction is because the M60, which is the main trend reading, is not there yet. You see? So I will be tidying my stuff a little bit on this one just because there's no commitment on the bigger long-term perspective of the trend. Does that make sense? Look at the sell-off coming now. The main trend, let me just open this up. The first thing you need to understand is the following. Zoom out. What is the price structure on NQ? Anybody pretty quick, tell me, what is the price structure on NQ? And we're done on our trading, by the way. You see this? A, B, C. Getting ready for the next move. I mean, for the bigger players. Understood. Do you see the clarity now? We use the tool to focus on the quick outside of the no trade zone. We managed to call all those levels up. Perfect. That's okay. Granted, it was the fact of that market volatility helped us a little bit today. That's not typically the norm. When we zoom in, I said we should look for an opportunity way past the 930 plus 20 minute by 950. If we go by 950, 950 was pretty much the one that actually broke outside of the ledger. Look, at 950 mark, boom, that was the opportunity there. The dashboard is still indicating a potential, where is it? Where are the arrows? It's on the 10 o'clock. We got here, let me see if this reads the 10 minute. Let me see what those arrows tell. It's gonna take a while now until they reload. Yeah, it's gonna take a while. All right, anyways, while that loads, because I have these two arrows on the bottom, all right, we call them dash. So basically, this tells you the immediate momentum based on price structure. Obviously, these are bullish. This should have been either mixed or bullish as well. I'm still holding here. This is the last one that I'm waiting for, is the 64, 43, and 58. You see how the strength of M60 has been dropping and dropping and dropping, and these twos are gaining momentum. It looks like these guys are transitioning, and most likely it's a highly probability that 43, 48, and 58 will be reached. Excuse me. All right, so I think I'm going to call it off. Now there it is. They keep pushing further up. Okay. What time is it? It's 10 o'clock reversal. That's the reason of the pullback. Looking bullish. Next level up, 94.50. Actually, 94.50, 975. Gold still is on the kind of a negative side of things. Olivia, welcome. Yes, nice to have you with us. On the NQ, once again. All right, so we pay attention here on the NQ. You can see long-term perspective bullish, extremely bullish at this point. Next level up should be that 94.50. Next level up 1325. Glance at the ES here for the moment. Is it this above 120 or yeah, as an average? Yes. 200% yes. I mean 150 yes. Going up. Same thing all across the board. Next level up, this is what the levels are for. You know exactly most likely the next potential output would be. Obviously, this is overrated at this point because if you do not have a personal objective, then you're just pretty much guesstimating and gambling with the market. You must have an objective. We already reached our objective way past, like a long time ago. All right. We're trying to aim for $1,000 on average. For instance, on the indices, trading 2 contracts, and once we reach that, we're done. Literally, we're done. And then we have a formula to scale up X amount of wins. We add another contract, and we add another $700 as a potential profit objective, and so on and so forth. Right? You have your own plan of action. This is not gambling. This is not the guesstimating. Let's see what the market will give me. No, at least you must have an idea what to walk away from, what the market will be willing to give you. Okay, so let's say that, all right, I know that the market today obviously is ridiculous, that the swings and the volatility. But it's obviously to swing for bigger objectives because basically you have to allow bigger drawdowns or stop losses, which is not applicable for everybody. So you self-adapt into the market every single day and understand, all right, I understand that today the mindset is going to be really volatile. I decided to step away. It's too volatile. It's too crazy. Yes, I would have made money. Yes, the targets were being hit. Yes, we nailed again the trend and targets. But that doesn't change the fact that there is a risk involved into the trading part of things, and it's way above the pay grade that I like. So I hope that transparency and honesty kind of shines through, because it's going to help you become a better trader as well, understanding when to step out and plain and simple not do anything. There you go. Mark says, I have 3,100 futures profit in Feb, trading CL and ES. Time to cool off since I already made my monthly profit goal. There you go, Mark. Great. Hats off to you. I think the same thing goes with, which I believe is a little bit bigger than that, but I think Jay, if I'm not mistaken, realized the exact same results. And the most important thing is knowing when to stop. You can switch then to demo on the remaining of the month and hone your skills. All right, guys. So it's we're gonna give it until 10:15, and I'm gonna be done with the live presentation. Here's the opportunity we have for you. What we call the backdoor trading mission page is a backdoor. You got an exclusive promo code. Is right here. This this code right here, where it's immediately gonna shave off $100 out of the first month, and you're gonna have access to the tool for the first month, the month of February. We're gonna give it a shot and try it and see what exactly what benefits would have brought to you at the end of the month, and we'll make a decisions afterwards. The key factor is to build a huge amount of savvy traders as a community. And for the remaining of the session, I'm going to keep this open for, so far I'm going to keep this open, I think, until 12 noon. Okay? Because of the resources. I think GoToWebinar is going to boot us out by 12 or 1. We're trying to keep it as far as we can. And if you see that it's already disconnected out of the blue, it wasn't us, it was automatic timeout. Understood. But so far they said that is good for, I think, up until noon or close to noon, because we start at I started at 7:30. Everybody's cool with that? Welcome aboard to the new members. You guys are awesome. Jack, it's up to you. You can take every opportunity that you might feel comfortable. Jack just said, what is your thought on thinking that when the market is giving you good setups and runs, to make the most out of it, since there are other times when the trading won't be as good? Yeah, absolutely. But that's applicable for everybody individually, Jack. Unfortunately, I have my rules of engagements that I need to follow through. So once I reach my personal objective, that's it, I'm done. I'm really disciplined. It cost me a lot of money to learn how to be disciplined. I'm just sharing the idea, because it hasn't cost you anything. You're either going to learn by experiencing the hardcore truth of being disciplined, or following some savvy advice. It's either or. Hey, Penny, thank you. You guys are the real deal, 100%. Absolutely. Thank you very much. Hope to see you part of the membership. It'd be great. Let me share. Oh, wait. Let me say. Where is it? There is, guys. Can you send me, P. Jimmy? Give me the link of the. Wait. Let me see if I can find it. Never mind. All right. Here's a link. Here's what I want you to do. Once you sign in, blah blah blah. Where is it? Here it is. Please. Right here, this course is a 2-hour course. Yes, I know. It's kind of a lengthy. Just, you can switch it or shave it in sections if you want. But the market profiling strategy is the way that we get paid $1,500, just so you know, to create a market profile for our clients for each instrument or stock that they trade. We recently got paid $4,800 to create a market profile for BTC, Bitcoin. Okay, we just got paid. And check this thing out. I'm giving you a 2-hour training on how to build those profile strategy for free as part of being a member. That's how freaking awesome we are. But I'm sharing to you that part of my business, Omega Bus Trading LLC, we get paid to create this profiling, and then once we have the profile done, guess what? We go in and create a trade plan based on the profiling and the personality of our client. Is a very specific objective for each one of those. So just go in here and just immediately, if you can sit down and take a couple minutes, just watch it. It's a thorough, or watch me over the shoulder how I actually create one. I don't remember, but I think I built one on Apple. I think it was Apple. Don't even remember. But there you go. Market's dying out. Now, let me explain. Check it out. Can you see the power of this now? Hold on. But you said it's going up. Yeah, that they're still slightly bullish at this point. But take a closer look at M60. Let me ask you a question. Was M60 above 110% positive at any given moment? Just type in yes or no. Just type in yes or no, if you were paying attention to it, though, of course. It wasn't, which never guarantees the full-fledged momentum on a bigger time frame trend. Does that make sense now? So how do you apply that knowledge or that information to your trading? But I can take a long position, yes, and I said it earlier. I could take a long position, try to go for the 43, but this is just suggesting me, dude, you better tighten your stops or collect some funds, because I am not backing this guy's up. The main trend is not bullish. It was bearish in the morning. It just changed at 9:30. Got it? You see how that works? And now I can have a better mindset of how to tackle my management decisions on the trade. Hope that kind of helps. Check a look. Now, gold, on the other hand, boom, next target down hit, 31.70. Again, that's another one. So we hit 1, 2, and the third. No, 1, 2, 3, 4, 5 objectives down, targets down. We're still missing 25, and by the look of it, it seems like these guys are going to push it all the way down. Okay? So this is no time to go to the pawn shop now. Oh, skied. All right, got it. Pulling bar would have worked, though. It would have worked, the pulling bar technique. Skied. So, all right, guys, so far, did you like the presentation? You learned a lot today. We're done. It's 10:15. I am signing up. I need to attend a few of our clients now, but, you know, as promised, I am going to mute myself from now on, and I wish you the very best. I'm going to keep here's the thing. You want to keep, last question. I was planning to do this and keep this open like this. Or do you want me to keep it like this? Which one do you like? Let's just place a number. 1 or 2. Which one you prefer? 1 being the momentum tool alone, or 2 having like all the lines and charts and all that stuff. 2. Okay, everybody likes it. 2 it is. All right, let me just squeeze down the levels here for you that you can, at least you can show most of them, right? And then let me make this thinner. And then how about this one? Let me see, what can I do? Let me just squeeze it in here. See what, okay, there you go. We got at least 2 more in it in the top side, but I need to then, there you go. And how about this one? Let me squeeze it in. I think that will work. And then YM, let's just move YM there. How about this one? Where's GC? Let's just GC here, right there. And this one, let me put it, there you go. And then how about this one? Squeeze it in. And then I'm gonna move it there. And there we got the remaining one. And then there you go. Well, that doesn't, I don't like that much, but maybe, there you go. I think that one will work. And we need the name of ES over here. That works. I'm missing the NQ. NQ. To the right. Move to the left. Move to the right. Move to the left. All right, and there you go. Let's see how over here. All right, I think we got most everything, I guess, for everybody. Reload Ninja script. Oh, there's it. Now that's the arrow there for you guys. Omoba, Carlos, thank you. You are a model integrity. God bless you. Thank you, Omoba. We're trying to take trading mission to the next level. I set this at the end of the year, so I think we might getting into something, I guess, right? So this is all for you guys. God bless you. Thank you very, very much for being here. Welcome once again for those of you. Kevin just got out of the deep dock to do up 20 ticks of the day being wrong. That's great. Just make sure, please go to this link right here, just on Chatsy. Guys, just click on it, trading mission /backdoor promo. And here's the special code. It's not going to work if you don't have it, and it's going to shave off $100 for you guys. Just click in there, go all the way down, wherever that is. Let me open it up. Join the room. And then you just put the promo code right in there. It's going to shave up $100. You're going to have access to the class, to that 2-hour training, and most importantly, for the remaining of the month, of February, we're sharing with you our secret tool here for you to take advantage, and obviously hope that can benefit definitely in your trading. All right, God bless you guys, and I'll see you tomorrow. All right, I'm signing off, which means I'm going to be muting myself from now on, and I'll see you tomorrow. Cheers.
Bye-bye.
Adios. Goodbye.